Hey, group members, welcome back to the Sunday stream. This is for October 25th, 2020. I'm going to start with futures. And today, futures opened up slightly lower. As you can see here, we dropped down all the way to 34.25, and we're slowly crawling up to the 34.50 and 34.60 mark where we left off on Friday. Some of the key levels that I'm looking at to open up next week, pretty much the same thing. We have support at 34.30, and we have the big resistance point at 34.80. I'm gonna just zoom into the 15-minute time frame. Actually, let's just make that to a 1-hour time frame. As you can see, the bigger picture here, 34.80 has been resistance, overhead resistance, since last Monday, actually. So this whole week, we've been stuck into this channel. So for me, 34.80 is a big point to break. And we have 34.15 as the next resistance. But in between there, I'm always looking at the psychological 3,500. So going into next week, I'm looking at a break of 34.80, 3,500, and the final confirmation at 35.15. Okay. If we were to break 34.30, I could see us dropping back down to 33.80, and any lower than that, 33.50 would be the next support line. Okay, heading into the watch list, I'm going to start with Apple. Apple on the 1-hour time frame, as you can see, we have 116 as overhead resistance. We're currently at 115. Apple's been into this weird trend of 114 to 122 since, I would say, what day is this? Since last Thursday. And we just gotta get past 116 as the next resistance, and 119 as the next major hurdle overhead. We have support at 114. We can also draw support right here as another confirmation at 112.50. So if 114 were to break, 112.50 would be the next major support. If you get into the 4-hour time frame, right? So we have 114, 112.50, 109, and 106.50 as a support. Looking at this chart right now, I mean, if I were to guess, or if I were to look at it with an unbiased standpoint, I would say we're going lower just by the shape, the pattern of where we're at. We got rejected at 139, 138.50, dropped down all the way to 104, made our way up, and we're going back down. I mean, unless we break 128, it's still a down pattern, and this is on a 4-hour time frame. Okay. Moving along, NVDA, ticker symbol. So this is on the 4-hour time frame. Again, we have 544 as a confirmation, 548 as resistance. So if I was looking at this heading into Monday, if we're at already 544, I would say, okay, well, a break of 547, right? Potentially, I could take profits at 560, which is the next resistance point. However, I still would feel that that would be more of a risky trade. So what I would look at is these 2 wicks right here. Keep in mind, we are on the 4-hour time frame, so there's a lot of data here. So obviously, as you can see here, 548 has been resistance. As you can see, we got wicked up here, pushed back down right here. This is a bearish candle, pushed back down, couldn't break it here. Again here, same here, we tried to break it. So I wouldn't necessarily enter at 548. I would say, okay, well, this is my first barrier, my first confirmation. I would probably enter right here. This would be something that's a little more safer for me. So I would say, all right, the first confirmation is 548. If we break 552 with volume, I would look to push 552 to 560 as a take profit. And the next major hurdle here is 565. To me, 565 is a lot more important than these numbers down here. It's just a number that we haven't been able to break consistently. We got rejected here, right? We tried to make an attempt to go back up, but we couldn't even go over 560. So to me, to have a trend change on NVIDIA, I'm looking at 565 as the major key resistance. Obviously, if we break 565 with increasing volume and market conditions are supporting it, I could see us going all the way to all-time highs. It would be 578, and a break of that 600 is very much possible. Now for support, 534 is support. A break of 534, we could head back down to 525. 534 is important to me. You could say 534. Let's just say 535, right, as the first confirmation, 530 as the next one. So I wouldn't necessarily short at 535, right? I would look for 530 to break, just because, you know, we have these candlestick wicks pulling back up. Right now, I mean, it looks like we've gained some sort of momentum, trying to shoot for that 552, but we don't know yet until Monday opens up. Okay, so that's NVIDIA on the 4-hour time frame. Heading over to Tesla. You know, Tesla had pretty good earnings. They reported some great numbers. Unfortunately, it didn't do much. So anyone that was playing earnings, calls or puts, pretty much got roasted. Again, for Tesla, we have major support at 405. You know, we had some weakness this past week in the market, so we came down and touched that. I had a play shorting Tesla at 436 and 426. I remember taking profits just prematurely around 410. Looking at this chart again, I'm looking at 426 as overhead resistance as first confirmation, 436. And if we can cross 436, I would say it would be a good entry point. But if you're a more conservative trader, I'll be looking at, you know, 545 as a key one. And 552, 555 would be a take profit. 552 and 555, these are key resistance points. Now I say that because we've had a hard time breaking that level. As you can see right here, you know, we pushed up, got rejected, pushed up, got rejected, same here, same here. We finally passed 552, but we have to pass 455 as major resistance. So no dice until we hit 455 convincingly, right? And then 464 would be a take profit area, right? Or a place to increase your positions if we break that. So key levels that I'm looking at on Tesla, 455, 464. But that's just getting a little ahead. Right now, you know, we have to get over 426 and 436. We have key support at 405. If that were to break, I'm looking at 400 as a stop, then all the way down to 388. So that's Tesla on the 4-hour time frame. Moving along, Netflix. Netflix. Okay, so Netflix had some bearish earnings. Not so well. We were at, let's just say 536 to 542 last week. And I believe earnings came out on Tuesday or Wednesday. And obviously it pushed back down to, previous levels that we're at back a few weeks ago. I would say this is September 28. September 28 was where we were before, after this earnings miss right here. We ran up all the way to let's just say 570, 572. We're right back down here. So if you look at over here and you compare it to over here, you would know right away that, 498, 500 is a key hurdle to pass. And if you were to enter there, 508, 512 would be take profit areas. But for me, that's just a little too risky. So, I would like to see 510, 512 break for me to feel confident. And if they were to break, I would look for a take profit at 522 and 530. Now, as for support, can we go lower than where we are right now at 48? Yes, definitely we can. Now, a lot of factors have to come into place, market conditions, stuff like that all matter into why the stock pushes down. It's not necessarily that it had an analyst downgrade or it missed earnings. Those are all bearish things, correct? However, you need to look at the big picture, and the big picture is the S&P 500. So if we're having a terrible week, or if it dumps, look for Netflix to drop down to 480, 477, 473, and 466. Do I envision that? Not really, but keep an eye on Netflix to see if we were to drop around this area. So again, that's Netflix on the 4-hour time frame. Moving along, Facebook. Okay, Facebook on the 4-hour time frame. Key resistance 291, 292. You can call that, right? There was support over here back on August 28, right? We dropped down, and obviously we came all the way down to 250, 247. Now we're trying to retest all-time highs at 307. I would look for 292, 291 to break for a take profit at 301. Looking at this chart right now, I wouldn't necessarily call it bullish or bearish. I would say neutral or towards bearish, leaning towards bearish. So 60% bullish. Like I said, key numbers here, 292. Break that, 301, 302. And, if we're up here already, we're most likely going to test all-time highs. In terms of support, key support, 280, that breaks, right? I'm looking at 274 and 270 as support. And that is on Facebook. Okay. Next one, Zoom. Zoom had a rough week. We had basically all-time highs at 588, and we dropped down due to market weakness, due to basically no more buyers. A lot of times when we're all at all-time highs and you're wondering, well, why aren't we pushing up? There is no resistance. And the simple fact is that buyers are exhausted. There aren't any more buyers. And when there aren't any more buyers, sellers, the bears push down. Just no demand up there. So when that happens, along with market conditions, we see ourselves dropping down to key levels. And some of the key levels that we dropped down to is the 507 mark. As you can see, we held it for support right here, right? And that was October 22. And we had it once more here. And we're currently trending around that area right now. On Zoom, if we open up here, I would look for first signal would be 520 to break. If 520 were to break, I'm looking at a 530 take profit. And if 530 was strong, I'm looking at 540. Huge rejection right here, right? You can just see that the bears took over. We had a big drop down here, tries to retest it, pushed back down. And, the trend right now is low. We're going down. 507 toward to break. I'm looking at 500 support. And 500 support, I'm looking at 488 as the next key one. We've had a lot of candlestick action right here. So 488 would be big support. Had a few great calls on Zoom. The drop from 530, the drop from 520. There's definitely a lot of opportunity here. A lot of these stocks are overvalued. I think Zoom is one of them. It's just one of those stocks that has really done well due to the pandemic. And, people are at home streaming, working, using this platform. So again, 520 as my confirmation, 530 resistance, 544, a nice take profit area. So let's see how we open up tomorrow on Zoom. Again, that's on the 4-hour time frame. There's a lot of data here, guys. Next one, Roku. Roku didn't do much. So Roku, again, we've been in this channel right here from October the 8th, right? Stuck into this channel. We broke out to all-time highs, got rejected, right? Pushed back down, and we're right back into this channel right here. So key levels that I'm looking at, 228.50 as an entry point, 231.50, 232 as take profit. Or if you were to say, 228.50 would be my first confirmation, right? And if 232 broke, I would enter. Risky trade, 228.50 to enter. Safer trade, 232 to enter. And I'll be looking at 234.5, 236 as take profit zones. Again, volume has to be confirming market conditions, and I'll be looking at all-time highs. Right now, no dice. 520 support, a break of 520, a nice shorting opportunity down to 214. And if 214 were to break, I'm looking at 208 as my support targets. And that again is on the 4-hour time frame. That is Roku. Okay, Peloton. 4-hour time frame. Looking at this chart, I would say we're more towards neutral. We're in this zone right here from 122.50 down to 114 for support. I could draw another line of support right here, right? Now this isn't perfect, so I would say 118.5 to 117 as support, right? We have some price action right here on the way up. So right now, if I were to trade Peloton, I would look for a break of 126.50, right? For a take profit of 128.50, 129. However, if you're more of a conservative, safer trader, I would look for 128 to break. 128.50, taking profits at 133. There's a lot of price action from 128.50 to 133. So, you know, what might look good entering at 128, just be cautious because there's a lot of action right here going up and down, right? So 133 is a big overhead resistance. And as I said over here, support at 118.50, 117.50. A break of that, I'm looking at 114. I push down to 114. So opening up tomorrow, we're at 122. My key levels is 126. We need that to break. Okay. Heading over to BABA as the next one. Okay, BABA is one of those tricky ones, and overhead resistance has been 310, and I guess you can say from 310 to 314, we've been stuck into this little resistance point. I would call it a channel from 313 to 310. You know, I don't like to play around too much with these zones because you got to understand which stock it is. BABA is one of those ones that when it moves, it doesn't move in large increments. So if you were to enter at 310, I would call that a risky trade, right? I would look for 313 to break even above this candle wick here at 314 as my resistance points. I like to see a break of this before I enter. That way you can, we can move on to all-time highs. Or, well, 314 is all-time highs. If we were to break that, it would be a safer trade as opposed to entering at 310 because we might get caught up in this price action right here. As you can see, we've had a long wick here, rejected, had a big wick here, rejected. So a safer trade over 314. If you're more of a riskier trader, I would say if we find support at 308, I would look to enter 310 to 313. Okay. Now we have key support at 303. As you can see, it held here, held here, held here, and pretty much these are long wicks where buyers are stepping in around this area of 303, 304. So that's key support. If 304 were to break, a nice shorting opportunity to 300 or 296 is very possible. Okay, that's BABA on the 4-hour time frame. SQ, Square. So Square, I'm a little disappointed with Square. I was hoping it could break all-time highs, but again, much like Roku, very similar pattern. We hit all-time highs at 193. We have some chop action here, and support was at 185. We held it here, 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 finally broke down, and I could see us dropping down to 170, but I'm just going to draw another support line right here, 173.50. Touched it here, touched it here, touched it here. This is a big touch for me. When we go up like this, consolidate, push back down, and it holds this level, right? Which was also the breakout point here. makes this key support for me. So if we were to break 173.50, it would be my first confirmation, right? You can short that to 170, but like I said, this would be my first confirmation to be more safe. And a break of 170, I would look for a short, right? Now, 170, 167 would be a nice take profit area just above this price action right here. On the flip side, I'm looking at 178.50, 179. You know, like I said before, or I've said, round numbers are key. So 180 would be a better entry for a call option, all the way to 182, 183.5 for take profit. This is a tricky one. So, you know, in all honesty, 183.50 would make me happier if that were to break, as opposed to entering at 178, 179. That's just my style of doing things. You know, everyone's different, and safer entry would be up here at 183. Okay, moving along. Next one, FedEx, FDX. This was a stock that was reaching all-time highs. I'd like to thank the member that brought it to my attention. As you guys know, I love breakouts. I live for them. So looking at this chart, you know, I'm bullish. I like the price action compared to other names because it's slow and steady, right? You know, we broke here, had some nice consolidation here, and we moved up, hitting all-time highs at 293. This type of price action is healthier than stocks that just go up in a straight line. I don't like that. You know, it's tough, and the pullbacks for those type of stocks are very volatile and unpredictable. Predictable in a sense that we are going to go down, because what goes up like that must come down. But stocks like this is healthy price action. You know, it's not euphoric. It's not emotional trading. So key levels on this stock, 286.50, right? For a take profit at 290. I would look to take profits here, or if the volume and market conditions are good, I would look to increase my position. So say I enter in at 286 out of one contract, right? We go to 290. You can either take your position right here off the table and take your profits off that one contract, or what I usually do is I increase my position to 2 or 3 contracts. Now, I'm not saying you should go increase your position to 2 or 3 contracts. Everyone has their you know, amount of money that they want to play with. So I'm not suggesting that you do this, but this is my method. So I look for 290 to break, for an increase of position, for a 293.5 to take profit. Now I could also increase my position for the third time at 293.50, because we are at all-time highs here. So depending on the market conditions, how SPX is doing, if there's an analyst upgrade, if the volume's great, I would look to increase my position and just ride that till the first sign of weakness, and I would close 2/3 of my position or completely. So that's just looking far ahead. In terms of support, I'm looking at 282, 280, and key support 275. Held it here, consolidated right from basically October 8th to October 15th. So this 275 level is key. Okay, so that's FedEx on the 4-hour time frame. Next one, UPS. A member wanted me to review this. And as you can see, it's one of those stocks that I don't usually trade because I don't have my, my markings on it. So we'll do this one together. So I'm looking at a clean chart right here. The first thing that jumps off to me, and remember, this is on a 4-hour time frame, so you can zoom in to the lower time frames for smaller entries. So key one right here, 154, another one, 145, another one right here, see this resistance right here, resistance right here. This is still resistance, a rug pull. So, and finally a breakout. So 164 is key for me here. Also, 170 got rejected here, right? Rejected here, pushed down, consolidated, finally broke through. Price action, consolidation, right? Tested it for support. So 170, all-time highs at 178. Okay. Now, let me just zoom in here. We can go to the 1-hour time frame to break it down even further. Right? Draw my support resistance zones. Right? 177. Okay. 171.25. Let's take it a little further. 15-minute time frame. Okay. If I was to day trade this, I'm looking at, let's see, this is a tricky one. 174. Okay. Going back to the 4-hour. Now we have a nice chart to look at. That's how basically I chart. Okay. So say we were to open at 172.28, key support at 171.5 to 170. So I would say this is more of a channel to break. I wouldn't say this is the actual number. I would say 170 breaking down. This is support. If we were to break down, I could see it potentially going to 164, but there are going to be some stops along the way. Now I'm going to draw a line right here. Okay. Okay. We could stop at 167. Touched it right here. Touched it right here. Held it right here. Rejected right here. So 167. If 170 were to break, 167 would be my first take profit. 164 would be my second take profit, right? And this is if you were to short. So if you were to buy puts. Bullish entries, I'm looking at confirmation at 174.50. Now, I'm not going to enter here. This is confirmation to say, okay, well, we broke 174.50. Great. 175.50 would be a good entry point. Not a great one. I'll explain why. 175.50, riding that to 177.5 or potentially to all-time highs. Now, why do I say it's a good one, but not a great one? Because you can enter at 175 and you can get pushed back down. As you can see, we had a lot of rug pulls. You could have entered at 175 here and you'd be like, oh, this is great. It's moving up. Well, we got rejected. Then a big push down. Again, you could have entered here and, oh, this is great. Oh, well, we got right pushed back down. Here, entered, fake out, fake out, fake out, again, again. So to me, this is more of a wait and see approach, more of a patience type thing. I personally wouldn't touch this until I see a break of 178. That's just me being safe, and that's just me guarding my capital. So a break of 178 on the downside, a break of 170 are key levels. Okay, so that's UPS, and that's pretty much everything that I wanted to discuss for this week's stream. Uh, we have a lot of earnings on a lot of big names. I'll be posting that pretty soon after I do this video, finish off this video, as I should say. Um, I will also have snapshots of all the stocks that I just mentioned today. And, guys, just stay patient. We had a rough 2 weeks of the market trending sideways, stuck in this channel. What I recommend to everyone that's trading is decrease your position sizing. Don't go in guns blazing, 3, 4, 5, 6 contracts. If you find yourself nervous or unsure, your main plan and your main confirmation should be the charts. You look at the charts, you do your homework the night before. So when you're looking at the charts and you're doing your homework and you're also journaling, guys, write down in your notebooks. You entered here. What was your mindset? Why did you enter here? So when you look back at the end of the week or you look back at the end of the day, you get to see where you made your mistakes, right? You get to see why you did certain things. Sometimes you forget, but writing it down on paper really helps. If you guys want to be successful long-term traders, if you guys want to do this for a living, right? You got to journal, study the stocks the night before, do the charting that just like how I did on UPS, check the economy, see what futures is doing the night before. You got to be a learning machine. Trading is very hard work. Nothing about trading is easy. It's not easy money. It's not glamorous like how people on Instagram and Facebook and social media outlets make it out to be. It's tough work, but it pays really well if you know what you're doing. Now, you don't have to be the most intellectual person, but you got to have patience. You got to control your greed, your emotions. And the key to controlling your emotions is having a game plan. So if you have a game plan, your emotions won't get the best of you because you've already written it down. You know what you're expecting, right? And when you're entering, you should know where you're entering, where you're exiting, and where your stop loss is going to be before you enter into any type of trade, whether that's options, trading shares, anything. And I'll also like to touch up on, options. Guys, when you're entering into a 1 week option, I know it says 1 week or 5 days, but realistically, if you're entering at a 1 week option, say Monday, don't let it get past Wednesday. Thursday, Friday, huge theta kills. It kills your premium, right? Not only do you have to be in the money, you have to exceed that to even make a profit because time is not on your side. When you choose a 2 week option, you're paying for time. So be careful buying 1 week options. For example, it's Wednesday and you buy a 1 week option, you have 2 days. When you buy a 1 week option in the middle of the week, you have to be really sure about your position, right? And by that, I mean the stock has to have a strong catalyst, strong volume, market must be pushing hard, right? And the volatility has decreased. Those things have to be in your favor if you're choosing a 1 week option towards the end of the week. So you have to be very sure. Now, if you're not sure, I would look into 2-week options, 3-week options, 1-month options, right? So it all depends on your strategy, but you got to be aware that time is the biggest killer. It's not just price action, it's time as well. So be cautious when you're entering 1-week options for those that are trading 1-week options. And during times when there's market uncertainty and there's talk about stimulus being approved, rejected, all this back and forth action, size down. You don't need 2 or 3 or 4 contracts. Understand that one contract is 100 shares. So take small profits along the way, enter small positions, get out quickly. Don't look for the big home run. You can make a great living by just hitting base hits, getting on first base, second base, third base. I use the baseball analogy where there's great Hall of Fame type players that made a living off just getting to first base, right? It doesn't involve hitting a home run. I've made a living just off collecting small profits. And believe me, it's a mindset. You go in and you understand that this is a business. You're going in to feed yourself, to pay your mortgage, to pay your bills. This is what you got to do. You're not looking to make $10 million or $1 million in a year or whatever. I mean, that's very much possible, very possible. But it takes consistency, day in, day out, taking small profits, and you build it. You build your account. I have done that. That's the way I did it. Now I'm teaching you guys to do the same thing. So patience, position sizing, doing your homework, journaling, and understand also that a lot of this is psychological. So I encourage everyone to work out, go to the gym, take your mind off the charts when it's time. You got to do that, whether it's working out, meditation, prayer, sitting in a dark room, away from everything to reset. If you have 1, 2, 3 red days in a row, just observe or walk away from the charts a little bit. Give yourself some breathing room. Get your mind right. Come back when you're ready. Don't revenge trade. So I recommend that to all the new traders, even seasoned traders. And guys, it took me a long time to get to that point. So I recommend it to everybody. And I wish all of you a great week. And I'm looking forward to seeing you guys tomorrow and chatting with you guys. All right. So thank you. And that's going to be the end of today's stream.